welcome to this special edition of The Appointment. I'm Shereen Bhan and we're celebrating 15 years of CNBC TV18's undisputed leadership in the business news space. Joining us today is a very special guest, a business leader who's been an integral part of the CNBC TV18 journey. Chanda Kochhar, appreciate you joining us on this very special episode of The Appointment. You know, as I pointed out, you've been a very integral part of the CNBC TV18 story. But before I talk to you about the present or the future, let me talk to you about the past. What would you say has been the most significant milestone in the past 15 years as far as ICICI Bank's growth story is concerned?
Oh, well, if you talk of last 15 years for ICICI as a group, I think it's been 15 years of full transformation. In fact, I can think of many major things that happened with the group in these 15 years. It was almost 15 years ago that we started our retail journey. Yeah. So the entire transformation into retail. It was just about 15 years ago or 12 to 15 years ago that we diversified into non-banking financial services. So our entire life insurance, non-life insurance, securities business and so on. It was also really our international foray has all happened only in these last 15 years. The merger between the bank and ICICI parent and creating the combined entity. So all this really has in a way transformed us as an institution in these 15 years, and all this has been underpinned by use of technology and achieving scale and size and diversity. You know,
you talked about the many milestones, as you pointed out. There are several of them that you've been able to achieve in the last 15 years. Let me now talk to you about the future. I'll come to the immediate future in a bit, but let me talk to you about the future. And I've been looking at various analyst comments while they talk about the performance of the bank and they talk about the future. And this is in the context of the valuation and comparing you with your peers. And one view is that, you've seen a branch network go up about sixfold in the last 7 years, while your business is up only 2 times. Also, there is a view that perhaps your earnings could double over the next few years. So in the context of valuation and growth potential, what would you respond to these analyst comments?
Well, first of all, in terms of growth potential, I would say that banks ride the Indian economy, but at whatever rate of GDP growth India sees, banking would grow at least 2.5 times that. And ICICI would grow at least 3 to 4% higher than the average banking growth rate. But when you talk of profitability, actually, again, one of the major milestones in the last few years has been the fact that our return on assets and return on equity has actually doubled in the last 4 to 4.5 years. About 4.5 years ago, 5 years ago, our return on assets was less than 1, which is now 1.8. Our return on equity was around 7.5, which is now 15. So I think doubling of ROA and ROE in 5 years again has been
very doable.
It's
very doable.
No, I would say actually it's been a major milestone and a major achievement. But clearly, going forward, one is also looking at further improvement in return on equity. And as far as valuations is concerned, I would think that at this point in time, there's a huge potential of actually valuation improvement, because ICICI Bank is one of the very few banks that can today grow without having to access more capital. So we have everything that it takes to grow with a capital adequacy of 17%, which is very, very high. So gives us enough room to grow profits, which can increase valuation. Second is that all the subsidiaries that we have created now are out of the investment mode. They are actually in the mode where they are generating huge returns on the investments that we made, and there is actually a potential to even harness that valuation.
I'll come to that valuation in just a bit, but you said you could significantly improve your valuation. Explain to us what significantly better could mean in terms of return on equity, for instance.
Today, we are operating at a deposit mix which is 75% retail. We are operating at net interest margins which is more than 3.3%. We are operating at return on equity which is 15%. We have the ability to grow our business wherever we want to grow. For instance, retail, we are growing at 20-25%. And all this at the back of such a healthy capital adequacy that from here on we can grow in the next few years without having to raise more capital, which means all the profits that increase just go to increase return on equity and do not dilute the equity holders. And that is really the big potential for valuation.
You know, speaking of potential and speaking of the big levers that could provide this kind of upside to growth, and you touched upon that, you know, whether it's the securities business, the insurance business, or the AMC business, currently account for about 10% of your consolidated profits and value. What do you see the role of these businesses over the next 5 to 10 years?
Actually, when you look at consolidated profits, now close to or a little less than 20% of the profits of the group really come from these businesses. So, you know, it's very different again. Till about 7 years ago, we were only investing money in these businesses. Today, they are actually contributing back. But the bigger, you know, upside, as I said, is the fact that the underlying value has actually not been fully valued. And we hold 74%, you know, in a life insurance company that is the largest private sector life insurance company, and similarly in general insurance. So the upside is huge. I don't think, you know, one should put numbers at any point in time till one takes the step, because every time the markets react differently. You know, as I said, there is a huge potential to actually unlock some of this.
What could be the options that you could look in terms of unlocking value?
Again, you know, we are in a position where we have multiple options available to us. So if the ownership guidelines in insurance change and allow a 49% you know, foreign holding, then
which
we have
likely at the end of the winter session of Parliament should be a done deal from the looks of it, at least at this point in time.
So we have the option of either offering, you know, a higher shareholding to our existing partners. We could have an option of actually having other, you know, foreign players, depending on which way the, you know, the rules are worked out. We could have an option of just listing. So, and we are eligible for all of these options.
What would be the most preferred option? And have you begun conversations with the existing investors or potential investors in the hope that this bill will finally see the light of the day, though it's been going back and forth since 1997?
No, we've not really begun discussions with any, you know, any set of investors, so to say. Of course, with our partners, we constantly talk about it, because this bill has been, you know, talked about for very, very long. But we haven't decided which step to take, because as I said, it will all depend on which way the guidelines are working.
So once the guidelines are out, and I'm assuming that this will be a done deal, because that's the sense that we get from the government, from the finance minister, how soon would you be able to move on this front and take one of the multiple options that you're currently exploring forward?
Well, if it is, you know, any of the foreign shareholders, that's much quicker. If it's listing, then it takes a little bit of time, because you know, you've got to prepare accounts and so on in that manner. But again, if it's listing, it actually need not wait for any change in the guidelines. So what we are doing is, we are in a way keeping the company ready to be able to take any step, you know, depending on the guidelines. But as I said, if it's a foreign shareholding, it can happen very fast. If it's listing, maybe a couple of quarters.
So once again, of the two, which would you prefer, or would you explore perhaps if the guidelines do change come the winter session of Parliament, and of course the FDI ceiling is relaxed, that would be the easiest and the most preferred option?
I would think that it's also going to be more fair, you know, for our partners so to wait till the time the guidelines are out, because you know, a guideline that has been talked about for so many years, and if we think that it's actually going to happen, I think we should wait and see in what form it happens, and then mutually decide as two partners what are the steps we want to take.
Okay, let me move away from that and talk to you about the current debate which is on as far as interest rates are concerned, and I want to understand where you stand and which camp you belong to, because the markets have been reacting in anticipation that perhaps we could see a surprise coming in from the Reserve Bank as early as the policy in December, largely on account of the noises that are coming in from North Block nudging the Reserve Bank into action as far as interest rates are concerned. But then the noises coming in from the Reserve Bank seem to suggest that, listen, it's too early or too premature to celebrate as far as the battle against inflation is concerned, so maybe you're going to have to wait longer. What is your base case now as far as the possible interest rate cut is concerned?
See, I'm not going to guess what is the step that the Reserve Bank is going to take, but if I break these elements of inflation, interest rate, and so on and so forth, RBI, of course, has said that they're looking at the inflation rates not just of 2015, but up to January 2016. And we must keep in mind that the inflation rates are actually going to be a little volatile because after January of 2015, the base effect is going to go away. So, in fact, it could take the inflation numbers a little higher.
Right.
So really, I think, that's a very clear formula that they have indicated. On the other hand, if you ask me, I would think that this is in a way a very opportune time because the commodity prices are low and oil prices being low is actually a big boon for India. I think it gives a very comforting time. I also think that a whole lot of focus on inflation has to come from addressing the supply side constraints as well. And I think finally that is the structural way in which inflation can be controlled in India. So, I'm hoping that a little bit room from the commodity prices, a little bit room from actually supply side steps being taken should all give monetary policy that leeway to be able to bring down interest rates.
By when? By when is the question?
No, I think that question only the regulator can answer.
This fiscal year, do you believe that there will be enough leeway for him to act on rates in this fiscal year?
I think towards the end of this fiscal year, one should see, some amount of movement happening in that direction.